Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Let's start because we have some interesting developments on the market. First, obviously, we need to deal with the calendar. This is the macro calendar for this week. As you can see on Tuesday pretty busy. We got already average earnings from UK, which came better than expectations, and this data is helping British pound to climb higher. Still to come, trade balance. Trade balance, we just got trade balance, sorry. Trade balance came worse than expectations, but still to come today, industrial production from US. I'm sorry, and that will be it for today. Without a further ado, let's go to the technical part of the analysis, because that is where the magic happens. And we start with euro dollar, because euro is pushing higher again. As you can see, now we are in a small symmetric triangle or a pennant formation, and well, in the short term we have a buy signal. Why we have a buy signal? Because of this bounce or a false breakout below this support, this orange one, and we have a comeback after this hammer. And here what we have is a triangle. Triangle pennant is a trend continuation pattern, so we should see the bounce from the lower line, which at the same time is a neckline from this inverse and shoulder formation, and we should see the breakout of the upper line of this formation and an upswing. This is my position that I had before. It's already gone on nice profit. It could be much better though. So euro dollar, we do have rather positive sentiment, but for the proper buy signal, buy signal will be triggered when we will break the upper blue line, S&P 500, which is on a very important long-term dynamic support, which is long-term uptrend line. So it's not surprising that it's not a coincidence that we do have a bounce here. Also, that is a horizontal support from the lows from May and June. And normally, American indexes would react with a bounce, with a strong reversal, with a V-shaped reversal. But now, instead of a V-shaped reversal, we do have a symmetric triangle or a pennant. And this kind of a formation, especially pennant, promotes a further drop. So this is a flat correction, which should result with the breakout of the lower line of this pattern, and another test of this horizontal support and dynamic uptrend line, which can be pretty dangerous for the buyers. If you want to buy, I would hesitate right now. I know that many stocks have attractive prices, but the upswing is not probable at the moment, and I would wait for the price to get to this checkpoint. So the buy signal here on S&P 500 will be triggered when the price will break the upper line of this formation and then break the pink resistance. American dollar to Canadian dollar reached this horizontal resistance and now is having a pullback. Well, I see inverse shoulder formation here, left shoulder, head, and a right shoulder. But for the buy signal, which comes from this formation, we still have to wait, and not a little bit, but quite a lot. So we need to wait for we need to see the price bouncing from this line and then aiming for this horizontal resistance and then aiming for the upper line of the wedge. So price getting here, breaking this resistance and breaking this resistance, will be a nice buy signal. Left shoulder head and right shoulder breakout buy. Gold. Gold is one of the heroes of the last week, because gold defended the long-term lower line of the symmetric triangle and went higher. Gold in the same time broke the upper line of the symmetric triangle and the 23.6 and the horizontal resistance created by this low, the sideways trend high, 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 high. So gold breaking those lines gave us a strong buy signal. But you already know that because we already discussed about that. And when the price was here, we draw this scenario of the price having a pullback and then testing this resistance as a support and then an upswing. And this almost happened. The reversal was not so strong as we expected. The reversal was like this, but then we witnessed a further upswing. And now it's getting interesting, because on a daily chart, when you measure the retracements of this downtrend, you can see that 23.6 is in line with the previous price movements. 38.2 is in line with the previous price movements, support resistance. 50% is in line with previous price movements, and 61.8 as well. So 38.2 is a legitimate resistance here, and chances that we will get there are pretty high. I really thought that we're gonna get there yesterday, but the price went slightly lower. So now we have to aim for 38.2, maybe we'll see a small bounce, then a breakout, then price should aim 50, small bounce, and that's how the reversal should look like. I'm not a fan of putting the downtrend line here, because for me this drop was too steep, and breakout of this trend line does not give us actually anything. Look at this, because 38.2 is important, because it's also a support from December 2017. So it may be really hard to break it. But the thing is that the end of the story for gold is that we do have a buy signal, and the price should be aiming higher in the next few days or weeks. WTI oil is having quite different signal, because WTI oil is moving more like stocks. So why am I mentioning this? Because usually commodities are going in line with the American dollar. Not always, but sometimes. Let's say sometimes. So when dollar is stronger, commodities are going down. Where dollar is weaker, commodities are going up. And very often gold goes in line with the oil. But this time is different. So oil goes down, gold goes up. So we are going in line with the global sentiment. So stock prices, indexes are the most important driver right now. So when there is a panic sell-off on stocks, precious metals, safe haven assets like gold are gaining traction, are going higher. Also gold, when stocks are going down, oil seems to be bounded with stocks, and oil is going down. Big picture here is that we broke the midterm uptrend line, which connects the higher lows since the middle of August, and now we are above the horizontal support here. Price being above the support is still good for the buyers, but the price closing a day below a green area is a sell signal. But the sell signal, which will have small profit factor, because the first support is here, and it will be very hard to deal with this support. This is long-term black uptrend line. But if you will risk opening short position here, and it will happen somehow that the price will break this line quite easily, you can expect a quite significant, strong, legitimate drop, which will make the bears rich. Euro to Swiss franc. That's what I said. Breakout only of this neckline of this double bottom formation should not give us super strong buy signal. Why? Because for the super strong buy signal, we needed much more for this. So a breakout of the correction equality pattern. So here, breakout of the 38.2, breakout of the upper line of the flag, breakout of this blue line. So in one place we had too many resistances, and it is said that price moves with the path of the least resistance. So if there is a big resistance ahead, the price will simply bounce from this line. Sell signal will be triggered here when the price will break the lower line of the flag formation. That would trigger us a sell signal. British pound to American dollar. We broke the lower line of the flag, which is supposed to be a sell signal, but now the price is reversing. There is no more sell signal, especially that we came back above this blue resistance. So the sentiment on the cable is positive. Obviously the news from Brexit are helping the British pound, and maybe soon we will have like a proper reversal here once we will break this line. Maybe not an inverse head and shoulder formation, but just a simple breakout of the midterm downtrend line, and just the simple fact that the price will start to make higher lows and higher highs. Now Australian dollar to American dollar. Here downswing flag, downswing wedge, most probably a downswing. Today the price is going down quite heavily. There is a problem with this resistance. So yesterday the price broke this resistance, but now it can be considered as a false breakout. And price went below the support, and now it's using this support as a resistance, and it works as a resistance, which complicates the situation a little bit and actually opens us a way towards those lows. And this is actually a position with an interesting risk to reward ratio. So if you sell here, stop loss is very tight on 15 pips, but the profit is on 80 pips. So this is really nice trading occasion. Canadian dollar to Japanese yen on a weekly chart is still in this head and shoulder formation scenario. We are still playing this game, but there is no sell signal here yet. The sell signal will be triggered only when the price will break this blue line. So price breaking this blue line will give us a proper sell signal. Dollar index is protecting the last important horizontal support which is left. So it's 50% FIBO. Obviously you have 61.8, but 50% FIBO here in this case is strengthened by the recent price movement. So look at support at the August. Here we have a support at September. Then resistance in September, then support in October. So price is still being above this line, is still a buy for the American dollar, but price breaking this line will be a definite sell signal for the dollar index. Australian dollar to Swiss franc here. I don't have a trading signal anymore. Okay, euro to British pound. That's quite interesting because we had this drop and we said that we need to see a reversal, and we saw a small reversal which aimed for 38.2. Obviously, they could stop on the uptrend line, the 38.2, or the midterm resistance marked with a blue color. They chose to reverse, as for now, they chose to reverse on the blue area on the 38.2. Fair enough. Price bouncing from the 38.2, that is a legitimate signal to go short. New Zealand dollar to Swiss franc. Actually, I want to change this. So far we had a downswing, correction, downswing, correction, downswing, correction, downswing, correction, upswing. So look, the price stopped to make lower lows and lower highs because this low is higher, and the price broke the downtrend line, but the very important line here is the neckline of this inverse head and shoulder formation, so left shoulder head and right shoulder. A broken neckline, broken downtrend line give us an interesting trading opportunity. There is this horizontal support. What I think is that if we will buy here, this resistance is dangerous. But let's say buying here after the breakout of this resistance, stop loss can be here, for example, on 40 pips. Let's check the risk to reward ratio, because the next target is on 38. So price getting there, stop loss for 50 pips, take profit 100 pips. Okay, fair enough, 2 to 1. That is an interesting trading opportunity, but if we consider the minimum target of the head and shoulder formation, which is taken from here, from the bottom of the head to the neckline, but it's just a theory and movements can be much bigger or much smaller, but just for the curiosity, 240 pips. So yes, we should get somewhere here to another Fibo. And also this Fibo is in line with the price movement, so that can be definitely interesting. Now DAX instrument from the Trading Sniper video. DAX is one of the heroes, one of the stars, and possess one of the strongest trading signals on the indexes. Because, for example, major indexes have still supports left, but DAX does not have any support left, because DAX broke the long-term uptrend line, not uptrend line, but the neckline. And this neckline is crucial for the situation on the DAX. And the breakout here sorts out the midterm sentiment, brings us a sell signal, and after this we should see a further continuation of we should see the further drop, simple as that. What I'm seeing here now, and you probably as well, is a pullback. Pullback is a typical action. So the price wants to test the recent resistance as the recent support as a closest resistance. It happens very often, so I bet that nobody who is trading for a while is not surprised with that. And if this resistance will be legitimate or not, it depends from the price action on this yellow area. So price bouncing from this yellow area will be a proper signal to go short, and the price breaking the yellow area will be a signal to go long based on the fact that we got a false breakout. So we are very, very close to a major signal. If you don't want to wait, you don't want to miss this opportunity, you can sell here and place your stop loss somewhere here. If you're willing to wait, fair enough. You have time, and you have your will and patience and everything. Australian dollar to New Zealand dollar is under the influence of the false breakout. False breakout from the symmetric triangle. So symmetric triangle is this line, and this line. So we got a breakout to the upside. The price also broke the horizontal resistance, and they almost went higher, right? The price came back below. False breakout pattern was established. Then sideways trend, then a further drop. The second drop is additionally driven by the data from New Zealand, which gave us better CPI, higher inflation. Higher inflation is definitely supportive for the currency. So New Zealand dollar is gaining traction with the neighbor, with the Australian dollar, and price came to our X point, and we use that X point to show you the entry point for the short position. So according to our previous analysis, we do have a sell signal. American dollar to Japanese yen, that is interesting because American dollar to Japanese yen is on a long-term horizontal support, dynamic support. There is long-term downtrend line. Actually, interesting fact is, let's see, what's the correction here? 330 pips. What's the correction here? 300 pips. 10% difference, because on a daily chart they looked similar. So I won't create a correction quality pattern, but I wanted to show this bounce from this downtrend line. But the only bounce here is not enough for a buy signal, because the price just aimed the midterm downtrend line and bounce from this midterm downtrend line, and what we should see here for the buy signal is a breakout of this red line. I even would go a step further and wait not only for the breakout of the red line, but also for the breakout of the 50% Fibonacci. So in my opinion, breakout of the 50% Fibonacci will be a significant signal to go long. Simple as that, because that would mean a sequence of higher lows and higher highs, bounce from the downtrend uptrend line, breakout of the downtrend line, so it would look sweet. But as for now, and as you can see, why I wait for the breakout of the downtrend line, because the price respects this downtrend line. You cannot make that up. You have a resistance, look here, 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 here. That's a strong resistance, and everybody's seeing that. Swiss franc to Japanese yen, after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days in a row of a drop, we finally have 2 days of an upswing, which is nothing, but it's always nice to see something like this. Swiss franc Japanese yen is directional pair, so they move when they will catch a trend, they move a lot. British pound to Japanese yen, here I was more than certain that we will get a short position, but it failed. So British pound to Japanese yen strikes again. What we have here is an ascending triangle pattern, which should result with a breakout to the upside. It resulted with the breakout to the downside, and at the same time we broke the midterm uptrend line, we broke midterm lower line of the triangle, another lower line of the triangle, 23.6 Fibo, horizontal support, and we broke all those supports, and the price reversed a little bit. Okay, that reversal was a nice signal to go short. But today the price is going higher, driven by the data, driven by the rumors from Brexit, or from Theresa May. So we do have a bit of fundamental issues here. Well, sometimes it's happened like that, the technical pattern will not work out because of the fundamentals, and well, sometimes you have to deal with that. But from the technical point of view, the setup here looked super amazing. Bitcoin. So Bitcoin yesterday tried to erase all the, in one day tried to erase all the losses for the past few weeks. 1, 2, 3, 4, 5 weeks of trading, more than a month in one day. That's pretty, it's brave. But the price did not stop in a random place. We stopped on the dynamic resistance, here dynamic resistance. We stopped on the horizontal resistance. And from this, it would be nice to see the downswing. It would be really very nice to see the downswing. This, what happened here, is not optimistic. Today the buyers still try to push the price higher, but it does not look good, to be honest with you. It does not look good at all. Why you had this bounce? Well, guys, this yellow support is crucial for the situation on Bitcoin. So once the yellow support will be gone, we will see the levels of $3,000 for one Bitcoin. That is why this support is being protected at all costs. We should not be surprised at all. Okay, I guess we can finish here now. Rest of the instruments we will analyze tomorrow. Thank you for coming to our webinar. I wish you all the best in trading. And now we'll have a small break. And after that we start our educational cycle again. We started with the Forex Basics webinar. I hope you will all attend this webinar. As for now, thanks very much. If you have any questions, do not hesitate to ask those questions to us. Send us an email or information on Twitter. You can reach us, definitely. So, again, thanks very much, guys, and good luck in trading.